Joining us this morning at the Agribusiness Desk is Mark Gold of Top Third Ag Marketing. Mark, let's talk about the WASDE report that comes out January 12th. What are you watching?
Well, first of all, I think we've got to take a close look at what the final production numbers are. Do we really have the production out there? There are a lot of people that think that the government numbers have been overstated and that the yields aren't quite as good. I know some of the top people that do a lot of the real close research on production numbers, stuff that isn't generally out there to the public, and they believe the numbers are going to be lower.
No.
They also believe that the feed usage is through the roof and that the carryouts could be significantly lower than what people are guessing. Now, whether or not they may be actually right in their interpretation
Sure.
or their results, but they may be wrong in what the government's going to tell us. Now, depending on who you want to believe, is the government going to be right or wrong? I think that's anybody's guess. I believe that they will shave a little bit off production. I believe that if they really start getting a handle on these stocks numbers, that things are tight.
Okay.
We're going to get the quarterly stocks number. That's going to be important to see how much grain is still in the American farmer's hands. If we have moved a lot of grain out of storage and out of the American farmer hands, we have a much better chance of this market sustaining a rally.
Okay, and we've had a little bit of a rally, but how do prices generally ebb and flow with this January report?
Well, interesting that you should say that. My friend Dave Hightower from the Hightower Report mentioned that the last 5 years on January 12th, we've either been limit up or limit down.
Wow.
And what's critical about that is that with the expanded limits now, corn moving 40 cents in one day on the limit, and then if they go to the expanded limits the second day, it's 60 cents. Corn can move $1 a bushel in 24 hours. Now, what's critical out there is if there is a surprise on the bear side, and we are limit down to, let's say, 2 days in a row, can the American farmer, if he's still holding this grain, can he withstand a $1 break in the market? My answer to that is, considering the high inputs that he's paying, that's going to make it very tough for the American farmer.
So real quick, he needs to get protected.
We would want to protect the downside with a put option if he hasn't sold the grain, absolutely.
All right, Mark, thanks for being here. We'll keep an eye on that report, and we'll be back with more Ag Day in just a minute.
For a special report on the grain markets, call Mark toll-free at 877-TT-HEDGE. That's 877-884-3343.